And the real problem is as bad as the US government budget deficit is, meaning interest on US government debt now is bumping up against the highest level it has ever been.
And there you have it from Mark Yusko. We got more coming from Mark, so you make sure you want to watch this one to the end. Before we get to any of that, what's happening, Crypto Crew? Sean's coming back at you, another cryptocurrency video. Getting straight into it and getting into the charts. What are we looking at? We're looking at the Bitcoin versus the US dollar. This is on the 5-minute. Why are we looking at this? At the current time it's recording, Bitcoin's coming in around 29.1, 29.2K. So pay attention. What we're looking at is two moving averages. We're looking at the 20 and the 200. Now these two moving averages can be something to pay attention to. The 200, as everybody knows, is a very, very strong moving average because it's what that average price would be over 200 days. 20 would be over 20 days, and so on and so forth. So what you see is this 200 is just flattening out. When we see this, we tend to see a move that's going to come. When the 200 flattens out on the lower time frames, whether that move is to the upside or downside, that typically is what follows. And we see we bottomed out. This blue line, this light blue line, is macro support from previous support structure that's formed in the higher time frames. We won't look at that. Taking a look at the 20 is important because once we get below or above it, if we can't get back above it, that move that tends to happen, precedingly, if you're doing trading, will fall. And you see we come back up, flip it, bounce up, bounce up, bounce up. And look where we are right now. It looks like we could be running out of steam. And as you see, you can use the RSI to sort of see what happened in the market. Because you see, this is macro support. We haven't came back down to it yet. We topped out. We see we were overbought. We were overbought here. Came back down, hit our head, kept hitting our head. And we were running out of steam till we finally fell off a cliff. Now look what happened. Bitcoin came back up and then was overbought, came down a little bit, came overbought again, but put in a higher high, and then came back down again and came back up, put a high. But look, this high here was lower than the previous high. Same for the price action. We went up to 29,250. This came up to about 29,226. So you see we're sort of running out of steam. We came down, didn't get quite oversold, came back up, and we're just sort of hitting our head along this line. This resistance right around 29,180. Are we going to see higher price action? We could see a dip back down to this 28.8 level, but also down to this $29,000 range, around 29,070, 29,060, around this 200 moving average. As you see before, it came out, bounced off, and put in a higher high. Could we come back down and bounce off of this and then put in a higher high? That could be what's in the cards. Zooming out and looking on the weekly, what do we see and what do we anticipate? If we look out here, we see we've been forming this macro support here from way back in 2015. We came back down and now we're at this level again. And if we zoom into this price action, we came back down to this macro support and bounced off it perfectly and then got back above that orange line. It's a 20 moving average. And remember, when that 20 moving average crosses back over that 200, that's pretty bullish. Or just bouncing off that orange line, bouncing off it, bouncing off it. Could we see a bounce up to the upside? That could be what's in the cards. The next macro resistance level is around these levels here, around the $30,000 threshold. Are we going to blast up through that to see? That's why we're just being suppressed right here. If we just look and see where the floor is, what we've been respecting as resistance and support, we're just sort of being squeezed and suppressed right below these levels right here. And if we get back above this level, you see that 20 is squeezing that up towards this resistance that we can't break through. We're trying. And look at the RSI. The RSI became oversold, came back down and put in a lower low, but the RSI stepped up and then started to stair step its way up. So this is looking bullish. We're going to see some more upwards momentum. Now, could we see a fall down and retest this macro support? It's a possibility, but right now it's looking like that Bitcoin is getting squeezed and could be making a move to the upside. How fast are we going to move? Time will tell, but you don't want to be waiting on the sidelines. Looking at one more price action on the weekly, this is the Heikin-Ashi candles. Same thing we just seen. We'd see this upwards momentum. We're just bouncing up, bouncing up. Right now, this is where the biggest level of resistance is, that $30,000 range. If you look back here, we came back up back in 2020 and blasted through this and flipped it to support before ultimately making that $65,000 peak. In the summertime, we came back down, retested this once, twice, 3 times before hitting the $69,000 peak. And then look what happened when we fell through it. This candle went from 30,000 all the way down to 18,000. So that was a major fall through. And then we came up and put in a lower low. But then we started to stair step our way out of the depths. So right now, this is definitely looking bullish for Bitcoin, and we're just stair stepping our way up. Remember what happens. You fall off a cliff and then take the stairs back up. So that's what we're doing right now. So without further ado, let's hear more from Mark Yusko and what his take is on what's going on with the money in the U.S. and how the central banks have been managing money and what the underlying issues are. Let's hear from Mark.
And the real problem is, as bad as the U.S. government budget deficit is, meaning interest on U.S. government debt now is bumping up against the highest level it has ever been. Well, what does that mean? Well, we can't not pay the interest, right? Or then we default, which is what Fitch and others are making subtle noises about. Well, we can't afford to pay the interest if we issued all the bonds at 0 and now rates are 5 on their way maybe to 6, how do we pay that interest? Well, this is what Japan has faced. And for years, their rates just stayed at 0. They just kept them at 0. And Kyle Bass for years would scream about how these guys had to default. There was no way they could balance the budget. And they hit 100% debt to GDP, then 150%, then 200%. And now they're at 225%, 226 or something like that. That's unfathomable for where we are in the US. It's just over 100, but probably prophetic, probably the way we're headed. So that's a really long-winded way of saying all central banks are facing the same problem. And it's a problem of their own creation. And it's, I will argue, an intentional act, not an unintentional act, because governments, as they consolidate power, spend. Why do they do that? Well, because it's profitable for them and their cronies. And, I was amazed. I actually was amazed by this, that I think it was Mitch McConnell actually said on television, don't worry about all this money that's going to Ukraine. It's not going to the Ukrainians. It's going to us. It's going to our companies to, buy bullets and bombs and stuff. So, wow, we just admitted that it's just graft and corruption. That proclivity to spend isn't going away.
Mark's saying that the spending's not going to go away. So what do you think? What's the only option that you got? Bitcoin. And with that, I'm Sean with the Bitcoin Bros. You guys like this content, go ahead and smash the like button. If you haven't subscribed to the channel, go ahead and show us some love. We appreciate the support. That's all I have for you today. And I'm out.